defensive stuff like low volatility stocks.
You know, speaking of volatility, I'm looking at the other factors here, and I'm asking, what are the factors that are going to become more important as we watch for the rest of earnings season?
Sure. So the one factor that we've really highlighted are EPS revisions as a driver of excess returns for stocks. So what that means is, the changes of the next quarter or next year EPS expectations over the last 3 months. So have analysts been increasing their expectations or decreasing their expectations? If you make a long short portfolio out of that, that's up 26% or so over the last year. So said another way, high EPS revisions have beaten low EPS revisions by 26% over the last year. And what's interesting there is that the volatility of that factor has been very low. It's been a very steady rise. When you do a Sharpe ratio over the last year is about 2, which is a crazy Sharpe ratio for a factor. So that's what to key on here as earnings roll in.
Yeah.
Romain, you remember Sharpe ratios?
I do. When I failed to see
excess return over the risk-free rate.
Yeah, I'm going to get that one day here. Chris, help us out here. For those folks who maybe haven't followed this as closely here, when you look at some of the sectors here with regards to EPS revisions, which are the ones that we're looking at here that show something that's a little bit more consistent with the sector outlook?
Sure. So we looked at which sectors have the highest percentage of their stocks make that first quintile of high EPS revisions. And those sectors are energy, real estate, materials, and financials. Those are the top 4. And coincidentally, those are also the 4 sectors that we favor in our sector scorecard that has other factors in it, not just EPS revisions. Mm-hmm. But those sectors look pretty good. I mean, on a technical basis, the relative price momentum is strong. The relative breadth is pretty strong. So meaning like percentages of stocks that are above their 50-day and 200-day moving averages. They continue to have positive EPS revisions as we're talking about, and have relatively attractive valuations as well. So those are at the top of our scorecard, and they're also the ones with the best EPS revisions. So we think they're well positioned here.
Really appreciate it. Chris Cain, equity strategist for Bloomberg Intelligence.
You remember Sharpe ratio? I'm a Sortino.
I screwed up. It's excess return.
You screwed up.
Divided by, it's per unit of risk.
I just put in the Excel function and let it ride.
Divided by standard deviation. There we go, Sortino. How about that? Take 2. Now we're going to keep you up to date with news from around the world. Here is John Hyland.
Taylor, thank you. Russian President Vladimir Putin says he ignored